This strategy hits like clockwork every day between 9:30 and 11 a.m. It's dead simple, it works, and I can prove it. I'm Colin, and for the last 6 years, I've been working on something I call the Trinity model. In this video, I'm handing it to you. It's the same model that got me funded $650,000 with prop firms and multiple payouts. Here's how it works.
Okay, so let's talk about today's trade with my Trinity model. First, we have to start off where we always do with the OHLC stat map. If you guys remember, I only like to take trades if one of these manipulation levels has been respected. In this case, midnight opened, we reached up towards our bearish manipulation level, but did not quite tag it yet at the end of our 8 o'clock candle. However, if I put this on the 15-minute replay, you'll see 9 o'clock opens, we come up. This is what it looked like right at market open. So we wicked up, took this liquidity. Not that that matters that much. We're just looking at the bearish manipulation level to be respected. And then we immediately traded away from that. And you can actually see this on the smaller time frame right here. If I pull up my NQ chart on the 1 minute, as you can see, this green candle right here is our 9:30 open. So we opened, wicked that manipulation, and then traded lower. So that's going to be my bias for the day. As you can see, I had a bearish bias already on my chart from earlier today. Now, the reason that this trade was different than my others is because we're currently at all-time highs, which means that there is absolutely no fair value up here to be used for us to take a trade from this level. So because of that, we're going to look to our 15-minute bullish gaps to get inversed in order for us to take that. If you'll notice, as we were reaching up to this bearish manipulation level today, I was expecting this 15-minute candle to provide a bullish fair value gap and hopefully for us to be able to inverse that and then take the retrace and the trade back out. What actually ended up happening is we wicked our manipulation level and immediately traded away from this without forming a gap. If you'll notice here, we did have a bullish 15-minute gap that was being respected over here. So it was being respected, wasn't being closed below. So I had this on my chart in the morning, expecting it to get inversed, or us to form one here, expecting that to get inversed. All because, like I said, there is no fair value up here for us to use. Now you might be thinking, well, there's a 15-minute fair value gap right here. Why would we not use that? If I draw this out, you'll notice that even though we did close within the gap, there is something that I don't mention a lot. And that's that anytime we close above consequent encroachment of a high time frame gap, with that being the 15-minute or higher, I mark it as an inversion gap. I wait till we close past consequent encroachment because it's a high time frame. Okay, consequent encroachment holds way more confluence on the high time frame than it does on the low time frame. So if we close above this, I'm going to consider this bearish gap an inversion gap. Well, what happens if we close above and then back below consequent encroachment, like we do right here? Okay, in this case, I am no longer willing to use this fair value gap and it will just be deleted off my chart. So because of that, if we come back to today, you'll notice that this gap was closed above and below, so we're not going to use it. And this inversion gap right here was also closed above and below, so we're not going to use it. Our next best thing is going to be this 15-minute bullish gap that we need to get inversed, right? So if we hop back down to our 1 minute chart, I'll show you what that looks like. So market opens and we trade down to this 15-minute gap. Now I want to see a close on the 1 minute past this 15-minute gap for us to form that inversion. That is going to be step one of the model, right? The stat map is for us to get our bias, and then step one is for us to tag into a high time frame for value gap, right? So I'm waiting for the retrace after this candle right here closes below. That confirms the inversion. So now we want to retrace and a trade back out. So what we ended up getting was something like this, right? Exactly what I wanted to see. We ended up forming SMT between these two highs right here, which is step two, right? So we retrace, we tag a high time frame for value gap, two high time frame for value gaps actually, because we had our new day opening gap here as well. So we form SMT between this high and this high. If you'll notice, this is 933's high. And if I go on ES at that same time, as you can see, we took our 933 high on ES with this higher high here, but on NQ, that was not the case. We formed a higher high and a lower high, right? So this is showing us that smart money is actively engaged at this area. So we have 2 out of 3 steps of the Trinity model. We have our high time frame gap. We have SMT confirming that this is the gap we want to trade out of. So now all I need is a change in state of delivery back down. Whenever we have a 15-minute inversion gap, I'm more willing to just take the break of this wick, provided that there's no inversion gaps formed. As in, if we do this and form an inversion gap inside of here, I'll take this as my entry. However, if we don't form an inversion gap, I will simply take the break of this wick right here because that is the candle that confirmed this as an inversion 15-minute, okay? So the way this looked for me was I just had a stop order sitting right here and my actual stop loss would be above this high, granted if we get entered. And then I'm simply targeting our opposing bullish manipulation level on the stat map. Okay, so for a total of a 5R. So we wait, let's skip through, and we finally end up breaking through there. So I get tagged in right at this candle right here. Okay, my stop is at this SMT. We'll just go ahead and set some contracts to sell here, and we'll do a stop above this SMT. Okay, now, where is my break even? Well, we're going to take our Fibonacci. We're going to put a standard deviation on the manipulation leg that retraced back into this 15-minute gap from low to high, the wicks. And I'm going to go break even at -1 standard deviations. Okay, so as soon as we tag that level, I'm going break even on this trade. So I'll skip through a couple candles. As you can see, that was pretty quick. We had to weather barely any drawdown here, and then we tagged our break even. So now I can move this to break even. My take profit, which I forgot to set, is still sitting down at our bullish manipulation. So I'm going to trail my stop each time we tag 2, 3, and 4 on the standard deviations. That's how I go about trailing my stops. And we'll play this out. Okay, so -2 gets tagged right here. I trim half of my contracts off at this level. Stop is still at break even. And at this point, my stop is going to be trailed to 2 internal highs above us. So we have one right here and one right here. So this is where my stop is going to go. Okay, so now my stop is trailed to this high. I don't want to see that return to. So we play this through a little bit more. As you can see, we trade all the way down. We trade through -3, but again, we only have 2 internal highs here, but then we tag -4. And once we break that low, it doesn't matter. We don't have to trail our stop anymore because that's the final target. This trade played out quite nicely. It was pretty quick. It took us 20 minutes to complete this trade. So really fast trade. 5R in 20 minutes. I will take that any day. And yeah, it was a really solid trade. I was very proud of this one. And that ended up being the bottom of the day as well. So if we play this through, you'll notice that we just kind of respect this bullish manipulation level for the rest of the day. Very neat. And this trade recovered my loss from yesterday by about 3 times over. Okay, so it's all about letting your winners run and keeping your losses super tight and super small and very few and far between. So yeah, that's the basis of the model. To recap, we came up, tagged our bearish manipulation level. That was my bearish bias. We then formed a 15-minute inversion gap for us to use as our high time frame gap lower because we didn't have any high time frame gaps to use up here. We then waited for this 15-minute gap to fully get inversed with this candle here that closed below it. Wait for the retrace back into that gap, SMT between 2 highs, and then the breakout trade right here with -1 standard deviations being our break-even price, -2 being our half trim, and the bullish manipulation on the stat map being our all-out target. So overall, super clean trade. And I do want to mention that even though this entry right here, the actual entry time, was outside of a macro, it does not matter because this 15-minute gap got inversed during our macro. So this whole gap is going to provide us with area to go lower, and all because it happened during a macro. If all this happened outside of a macro, I just wouldn't have taken the trade. Simple as that. I hope you guys got a lot of value out of this video. If you did, please make sure to like and subscribe. I still have spots open for my one-on-one lifetime mentorship where you can have direct access to me, one-on-one calls every week, and all that good stuff. If you're interested in applying for that, because it is an application and we do push people off that don't actually have the work ethic to put in. But if you're interested in applying, click the link in my description and you can book a call with my team. Thank you guys for watching. If you have any ideas for my future videos, please make sure to leave those in the comments and I will look to make that. Thank you guys, and I'll see you guys next time. Peace.